जी सर।
So this is your teacher Harrisburg, and we are solving basically a question from A2 accounting, and the topic is investment appraisal. So we are solving a question of A2 accounting from investment appraisal. So let's see that how this question is going to be solved. So this question has come in A levels, A2 accounting, investment appraisal, May, June 2342. So I am expecting such type of a question in this time also in the exam, right? So May, June 2342. So hopefully you will find the same type of question in May, June 2542 also. So let's see. Source A for question 1, because insert is always given separately. Beachside is a village with 320 houses. So beachside is a village with 320 houses. The continued existence of which is threatened by rising sea levels. ठीक है जी. तो क्या हो रहा है जी कि जी फ्लड आने का चांसेस है because we are making constructing a society very near the sea area. You know that in Lahore also there are societies which are going to develop in near the sea area. अब तो बहुत प्रॉपरली 100% डेवलप भी हो चुकी है कई. ठीक है ना, वो सी लेवल ही कम हो गया वरना वो सब में सोसाइटीज जो है खत्म हो जाती. चलें, तो कह रहे जी कि सोसाइटी विलेज जो है which is having a 320 houses, the continued existence of which is threatened by rising sea levels because sea levels were rising. So it is presumed that maybe the village is in danger. The residents approached Hiram, that is a company, a building contractor, it to suggest a project for building a sea wall to protect their village. So the villagers have asked a person Hiram that you are supposed to build a sea wall to protect the village. So this is going to be a long-term project for the person because constructing a sea wall for the whole village is not an easy task. It will take time. So the cost will also incur with the passage of time, and the return will also come over the particular period of time, like 3 or 4 years. The cost of Hiram of building the wall would be 4 lakh payable at the start of the project. Initial investment for building the wall is going to be 4 lakh. The local government was prepared to make a grant of 1,42,000 in year 1. So local government is ready to pay 1,42,000 a grant to Hiram for the project. So this is going to be year 1. So in year 1, this is going to be a cash inflow. This is a cash benefit. This is a receipt which is going to achieve by Hiram because of the construction of that building. Right? So 142,000 will be a return from the project in year 1, okay, through a grant from the government. The way the return has come, that is from the grant. The residents have had together decided, लोगों ने भी decide किया village के that each household would pay Hiram a fee of 200 per annum for each of the years for year 1 to 4. So each resident has decided, means every house has decided that they will pay Hiram how much, how many houses are the village houses are there, 320, at the rate of 200 per annum. This is also going to be a cash inflow. It's also going to be a net cash inflow, increase in cash from year 1 to year 4, 64,000. So that is also going to be. Next is, the residents believe that the village would become a more desirable place to live. Residents has this kind of an idea that village will become a more desirable place. We can live in the village, then we can continue to live in the village easily if the wall was in place, if the wall is going to be constructed. They therefore told Hiram that they expect that 80 new houses would be built in each of the year 2, 3, and 4. So they are of the view, because when the wall construction has been starting and 4 lakh has been paid for the construction of wall, so we expect that in year 2, 3, and 4, more 80 houses will be constructed in year 2, 3, and 4. 80 new houses would be built in each of the year. In each of the year 2, 3, and 4. It means that in year 1, the houses were 320. In year 2, the house is going to be 400. In year 3, the houses are going to be 480. And in year 4, the houses are going to be 560. No, sir? Yes. Because the 80 new houses would be built in each of the year 2, 3, and 4. You see that he has highlighted each because he wanted to realize you He wants to make you realize कि भाई जरा ध्यान से, because every year the 80 houses has been increasing continuously. So there would be no cash flows after the end of year 4. What is this? This is the scrap value, the salvage value, the disposal value. So after the year 4, we are not going to get any benefit. Okay? So there is no any cash benefit arising after the completion of the project. Next is May, June 2342. Calculate the net cash flow for each year and in total for the project. So let's calculate the net cash flow for each year and in total for the project. So let's see. Year 0, 1, 2, 3, 4. Okay. Net cash flows. Oh, sorry, cash flows. First of all, we have what payment? Houses, I will write. Start of the project. Okay. So let's see the houses. You can write initial outflow. Initial outflow will be in 0 year, which is going to be how much? That is 4 lakh. Then the houses are going to be 320 in year 1, then 400, then 480, and then 560. Right? So let's see. In year 1, he has clearly stated that we are getting a grant from the government of 1,42,000. So you can write here grant, which is an inflow and which is going to come in year 1 and which is for 142,000, right? 142,000. Then in every household is going to pay Haram a fee of 200 per annum for each house. So fee received, that is for year 1, 320 into 200, how much? 64,000, right? Then 400 into 200, 80,000. Then 480 into 200. Can you tell me? 96,000. And then 560 into 112, 112,000. So here I will write the net cash flows. In year 0, we are going to have an outflow of 4 lakh. In year 1, we are going to have an inflow of how much? 142,000 plus 64,000. What it is going to be? 206,000. 142,000 plus 64,000. 206,000. Okay. Then 80,000. Then 96,000. Sorry. And then 112,000. Okay. Now, the examiner has also asked you that you need to get the net cash flow for each year and in total for the project. So we also want to know the total cash flow for the project, which is not a part of the investment appraisal, but because he wants us to find the net cash flow of the project. So what you will do, you will add up the positive values and will subtract the negative value of 4 lakh. That is without discount factor. We are not used to do that more often. Rather, never we have done that. But because he has asked for that, so I will go for the total of the positive values, and then I will get the minus 4 lakh, will get the net cash flow. That is 94,000. No, 94,000, my dear. So apparently it looks that we should go for the project. Hiram should build the wall because he's getting a 94,000 positive return, but he's not looking for the discount factor right now. When you will discount the net cash flows, the amount will decrease. Then we'll see that how much net present value we'll get from the project. Let's see. The accounting rate of return in 2 decimal places we have to calculate. So let's go for it. ARR. The formula for ARR is how much? Average profit divided by average investment multiplied by 100. So what is the average profit? Average profit is going to be total cash flows minus total depreciation divided by 4. Total cash flows, if we just look for the total cash flows, we need to find it out that how much it is going to be the total cash flows. Can you calculate that? I think that is 494,000, right? Minus total depreciation is 4 lakh. So how come? The initial investment is 4 lakh for the construction of the wall, right? Divide by 4. That is going to be our, yes, 4 lakh divided by 4. So the answer is 23,500. So the average profit, which is the total cash flows minus total depreciation divided by 4, 23,500. Average investment, I don't need to calculate because it is rather very easy. 23,500 divided by average investment, original investment divided by 2. 4 lakh divided by 2, that is 2 lakh multiplied by 100. So we'll get the ARR, accounting rate of return or average rate of return, which is going to be a percentage. There is no cut-off criteria for ARR, and it is a profit-based method. It does not take into account time value of money. It is easy to understand, easy to calculate. 11.75%. So apparently it looks that it is more than the cost of capital. The percentage of ARR, it is more than the cost of capital because I presume that the cost of capital is going to be 10%. So let's see that what is the cost of capital is 11.75. Let's see the question now. So ARR we have calculated, 3 marks are there for that. Now, yes, that was 10%. So INAM is a cost of capital was 10%, and the relevant discount factor was as follows. Calculate the net present value NPV of the project. So calculate karte hain, let's see. Net cash flows are already given. I will write here discount factor at the rate of 10%. That is for 4 lakh, it will remain at 1, then 0.909, then 0.826, then 0.751, and then 0.683. Okay. Okay. Now I will go with the present values. The first present value for year 0 is going to remain the same. That is 4 lakh negative because there is no discount factor. There is no cost of debt. There is no cost of capital. Value will remain the same. But after 1 year, we are getting 2,06,000 at the end of year 1. So that needs to be discounted. So the future present value of the future cash flows, net cash flows, 206,000 multiplied by 0.909. $206,000 multiplied by 0.909. So how much it will become? 187,254. Okay. Next, 80,000 into 0.826. 66080. Then 96,000 into 0.751. 72,096. Then 1,12,000 into 0.683. 683. 496. 76 496. So now I am going to calculate the net present value. That is, I will add up all the positive cash flows and I will subtract 4 lakh to find the net present value, or known as NPV. If the NPV is greater than 0, I will accept the project. If it is less than 0, I will reject the project. So the NPV of the project is 1926. He is saying 1926. You can calculate it again. So it is still giving a positive NPV, which is very, it is on the lesser side, because if we increase the cost of capital, NPV can go negative. But we are still having a positive NPV, so we will accept the project because NPV is still positive. How much it will become? $1926, yes. Minus 4 lakh, my dear. Minus 4 lakh. 1926 is going to be the positive NPV. So we'll accept the project. Let's move forward. Addition information. In addition, as Hiram remained undecided as to whether he should proceed, the residents made a further suggestion. Because Hiram was of the view that I am not getting a very high NPV. NPV is on the very lower side. So for that much long-term project, right? Even the smaller positive NPV, I'm not sure about it, right? So the residence has given a further suggestion. In addition to the seawall, Hiram could build an extension to enable local fishermen to land their catches more easily. So local fishermen he has allowed them to build an extension in the sea so that they can go into the sea in more depth and can get the fish out of there. This would add 20,000 to the building cost. The building cost will increase by 20,000. The residents believe that if the extension was built, it would result in a further increase of another 20 new houses being built in each of the year 2, 3, and 4. So people will attract more because more fishermen like Hassan and like me will join the village ताकि हम भी मछलियां पकड़ लें. क्यों हसान भाई? आपको तो बहुत शौक है मछलियां पकड़ने. ठीक है जी. So 2, 3, 4, 20 new houses will be built. So what will happen? This will become in year 2. How much it will become? 420. This will become 500, and this will become 580, right? But I have to write here now. Okay, I will write here first. But the cash flows, the net cash flows, I must see, will change. In year 0, there is an outflow of how much, beta? 4,20,000 now. Because 20,000 outflow has, because of the extension, building cost will increase by 20,000, right? So there is going to be, in year 0, there is going to be an outflow of 20,000 in addition to whatever was there previously. In year 1, the value of net cash flow is going to be 420. In year 1, it will remain the same. There is no change. So that is going to be 206,000. But in year 2, the value will change. 420 multiplied by 200. How much it will come? 84,000. Then in year 3, 500 into 1 lakh, 500 into 200. Then 580 into 200. 116,000. 580 into 200. Now, I will again use the present value factor at the rate of 10%, because discount factor is going to be the same. That it will be 1, then 0.909, then 0.826, then 0.751, and then 0.683. So let's calculate the present value again. Obviously, it will change because we'll see that what present value will now be, and either we should accept the project or not, and we'll decide accordingly. Okay. Each each year 20 will increase. You are right. You are right. Each year 20 will increase. So I have added each year. Okay. You are right. You are right. You are right. Yes. Each year 20 will increase. Then it becomes that 400 will become 420. That's sure. But now you will add 420 plus 20 more. So there will be 80. 420 plus 80 because the normal increase has also been going on. Which increase? Which was in the past? How much? Let me check it out first. No. I'm not saying this. See. Over here is saying that 80 new houses will be built in each of the year 2 and 3 and 4. Okay? So it means that 420 plus 80, 500 and then plus 20. So it will become 520. Am I getting my point? Because 420 we will become 80 new houses and then we will add 20 more into that. So it will going to become 520 houses. Let me correct it first. And then again 520 plus 80, 600 and then again 20. So it will become 620. So now the cash flow values is going to be changed. Let me correct it. But only 3 of them is going to change, will remain the same. So in year 2, the value will become, oh sorry, year 2 was the same. Sorry. What was the value of year 2? Sorry. 420 into 200. 84. 84,000. Then in year 3, 104,000. And then in year 4, 124,000. Now you can multiply this with the discount rates. The first will become the negative 4 lakh because the present value of the future initial investment is going to be the same. That is 4 lakh in year 1. But for year 0, sorry, in year 0 it will remain the same. For year 1, 2,06,000 into 0.909. 187,254. Okay. Six nine three eight four. Then 1,04,000 into 0.751. 78104. And then 1,24,000 into 0.683. 84692. Now you can add them up. You can add the positive values and you can subtract the 4 minus 4 lakh. You will get the net present value of the project with the concerned changes. The 28 new houses each year will be built in 2, 3 and 4 along with the 80 new houses each year. And the rate of 10% is within the same. Initial investment has increased from 4 lakh to 4,20,000. And obviously now you are getting a well-established positive NPV. 19,434. So it clearly suggests that this option is much better and we will definitely go for this new proposal because that is giving us a positive NPV of 19,434. This type of complexity will come in the paper. This is May June 2342, but you can't consider that it is very difficult, right? But I have solved much more difficult questions. He's saying negative NPV 566. Okay. Let me. There is a negative NP of 566. So we will not go for the proposal. अच्छा वो 4,20,000. So we have a negative NPV of 566. So I can write a bracket over here just to make you understand. This was 4,20,000 and 4,20,000 into 1 is a negative 4,20,000. So 566 NPV is negative. But before that, the NPV of the project was positive. So now you will not accept the project and you will not go for the construction of the building extension. So what is the requirement of the next part? Net cash flow, we are done with the debt. And we are done with this. Calculate the change in NP, which would arise if the extension was also built. Your answer should indicate whether the change is an increase or a decrease. There is a decrease actually. The change has decreased actually. Advise whether or not he should agree to build the sea wall and the extension. Justify your answer. We will go for the, but we will not go with that particular. We will not take up that particular proposal. It should not be undecided because if he is going to build the extension for the local fisherman, his NPV will become negative. And what decrease in NPV he is going to get? I have to show that 1926 plus 566. But it is now, this is a decrease in NPV actually. 2492. So NPV will decrease by 2492 because it will become 0 first and then it will go negative. Now you see, this is 566 negative. So NPV will decrease by 1926 plus 566. It has to be decreased by 2492 or 2500 to get a negative NPV of 566. So, but with the first instance, the extension of the wall will go for the project. Why? Because of the corporate social responsibility also. Because it is for the benefit of the society. Right? So non-financial factor should also be considered. Secondly, government is also giving us grant for that. So we can have more projects in the future. Secondly, we are getting a positive NPV of 1926. But we can't go for the building extension of the local fishermen because it is going to make our NPV negative by 2,500. So we'll remain with the first part of the place and we'll build the wall accordingly for the betterment of the village. And then we can have much more, projects of the government also. It might be possible. We can achieve some much more projects of the government. So we will accept the project because non-financial factors will also be taken into account while taking a decision. Then you can go for some other alternative means that you can go for payback period. You can calculate payback period for that particular project because we have calculated ARR, which is more than the cost of capital. You can check the payback period also, right? If payback period is earlier, then it is fine. Then we should go for this particular project. I think payback period is okay. It's not bad because out of 4 lakh, you are getting 2,06,000 in the first year. Then 80,000 in the next year and 96,000. I think payback will third year में जाके payback period हमारा complete हो रहा है मेरे ख्याल में. हाँ, third year में भी नहीं हो रहा, fourth year में जाके. So payback period is also not that good, है ना? But we'll still go for with the project. हाँ, fourth year में. ठीक है जी. So we are done with this question. I will solve the next. You can solve the next question at home. October, November 22, 31, if you want to. October, November 22, 31. And then tomorrow, inshallah, I'll solve this question. That is May, June, October, November 23, 43. Inshallah. Tomorrow we'll go for that. Thank you very much. 31.